We think the USDCAD currency pair can offer some great trading opportunities this week. Stay tuned to this video to find out why. Hey guys, Arnie here from Forex Source, where we help you to trade and understand the currency markets better. Now guys, on this channel we do a lot of educational content focusing on fundamental analysis. So if you're new here, definitely consider subscribing. Guys, welcome to another week ahead video. This video will focus on the trading week from the 15th to the 19th of July 2019. Now this week guys, we have important US data including US retail sales and we have Canadian CPI, and if we see big deviations in these data points, it could create great trading opportunities for us this week. So let's go straight to today's video to find out how we can prepare and possibly trade these events. Okay guys, now our main focus point for this week is a possible trading opportunity on the US dollar and more specifically on the USD-CAD, but we'll get to that just now. For those of you that don't know, last week we had Fed Chair Powell's semi-annual testimony. Now, these events can be very market moving, as they're usually used by the Fed to express their current opinions about the US economy as well as their forward-looking guidance about the economy as well as interest rates. Now, the Fed chair can sometimes give a little bit more details away with regards to forward guidance at these testimonies when we compare it to something like the normal FOMC meetings, because these testimonies only occur twice a year. Now, at last week's meeting, Fed Chair Powell struck a dovish tone at the testimony, and they called for a more accommodative monetary policy stance in the future for the US. Now, some of the reasons given by Fed Chair Powell for this accommodative policy shift has been uncertainties about the global economy. He also mentioned persistently lower than expected inflation, also mentioned the unanchored inflation expectations as well as downward revisions of the estimates of the neutral rate of employment. Now, even though Powell said that the overall financial conditions for the US remain supportive for growth, there are quite a few important growth metrics that has slowed in recent months. You guys will remember that we had the PMIs, both of the services as well as the manufacturing one has slowed from the peaks that we've seen in 2018. So some of those growth metrics are definitely slowing and have been slowing. Now, going into this testimony, the market was actually pricing in a 97.6% probability of a 25 basis point cut, but they were only pricing in about a 2% chance of a 50 basis point cut. Now, after the testimony, that actually changed drastically, where the chances or probabilities of a 50 basis point cut rose back to almost 30%. So that just shows the extent of the dovish turn and how the markets took that as a very dovish shift by the Fed indeed. Now, with this dovish shift by the Fed, we saw the USD sell off across the board, and we do expect, if we get any further negative surprises on data points, that could be used as good catalyst for us to look for shorting opportunities on the US dollar. Now, we also had a little bit of an interesting thing happen on Thursday last week. The first testimony occurred on Wednesday, but on Thursday we had a better than expected core CPI print for the US, which gave the dollar a small reprieve as markets debated whether the Fed's fear about that persistently lower inflation was actually correct. But it's important for us to remember, guys, that CPI print is just one piece of the economic puzzle. So the Fed is worried about much more than just CPI, and we would not expect them to change course due to one surprise beat on a CPI. It would take a trend of better than expected numbers or a trend of better than expected CPI prints for them to change course. So that's just something to keep in mind. Now, we have a couple of important events lined up this week which could offer us some great trading opportunities or catalysts to look for shorting opportunities on the dollar. On Tuesday, we have retail sales. Now, markets are expecting both the month-over-month retail sales and month-over-month core retail sales to slow to 0.2% from a prior of 0.5%, and for retail control group, which is a very important number if you didn't know that already, to slow to 0.3% from 0.5%. We also have a couple of important Fed members up this week, so make sure to stay close to your newsfeed when they are up to talk. And we also have the Empire State Manufacturing Index on Monday. We also have the Philly Fed Manufacturing Index on Thursday and the prelim University of Michigan Consumer Sentiment due on Friday. All of these events can be important, especially because all of that focus will now be on the incoming data that we receive coming from the US. Now, any big misses in any one of these numbers, guys, could provide a great catalyst for us to short the dollar. And alternatively, any big positive surprises in these numbers could complicate the short-term view of the US dollar, but it should not be enough to sway the Fed from their current easier policy stance and could provide us with opportunities to simply sell the dollar at better levels. Okay, guys, so now that we understand the reasons why we are going to be focusing on the US dollar, we can have a look at the USDCAD chart and look at some of the technicals. Now, in case that we get big negative surprises on any one of the important US data points this week, or if we get further dovish comments from the Fed speakers, we would pair the US dollar with the Canadian dollar. Now, it is important for us to remember that the BOC did have their monetary policy meeting last week as well. And even though the BOC did come out a little bit more dovish than the markets were expecting last week, it is important for us to remember that the BOC maintained their neutral monetary policy stance. Now, that's important for us to remember because they are remaining neutral while other central banks have turned dovish. Now, that, in our opinion, should keep the CAD supported, at least in the short and medium term, as long as the economic data continues to look solid, as well as oil prices continue to edge higher. Now, we do also have CPI for the Canadian dollar due on Wednesday, and after the very big positive surprise that we saw for May CPI numbers, this event this week will be very important for the CAD. And any big miss on this CPI print this week would invalidate our USDCAD short idea for this week, as that could probably see a lot of that long positioning on the CAD possibly being reduced. Now, if we just quickly jump to the USDCAD chart, we can see that we've had quite a big run downwards in the USDCAD following the previous FOMC meeting, breaking through some very important psychological levels like the 132 level, and now currently just flirting with that 130 handle as well. Now, with this big move downwards, we would really ideally like to wait for a possible pullback, as we don't really like to be selling here down at the lows. So by looking at the chart, guys, you can see that we've drawn in our Fibonacci retracement from this swing high at the 134 handle to this daily swing low close to the 130 handle. Now, by doing that, we can see that we have an interesting shorting area here with both the 38.2% fib as well as the 50% fib levels. We also have the 132 important psychological level and this previous support area at the 132.50. So if we do see some sort of retracement or pullback into this area, that looks like a higher probability area to look for possible short on the USDCAD. Now, if we just quickly zoom out and we use our Fibonacci expansion tool like we have here to look for a possible target, we can see that we have confluence with the 61.8% fib expansion, as well as this cluster of support on the daily chart, as well as the 129 handle. So a target just above this zone looks like a good possible option. And guys, like we said, we would want to wait for a possible pullback to take advantage of a short trade on the USDCAD. But having said that, if we get really big negative surprises on the US data this week, or if we get a very big positive surprise on the CAD CPI, we could consider jumping in at market and riding a short-term trade for a couple of pips down in the pair. Just be aware of this support area. If you just quickly zoom out again, just be aware of this support area we have at the 129 if that happens close to that level. Guys, thank you so much for taking the time to watch this video. We'll catch you guys again next week. Cheers.